Today I will be explaining about the introduction of Barclays. Barclays is a global financial institution with over 300 years of history, originating in London in 1690 as a small goldsmith banking operation. Over the centuries, Barclays has grown into a worldwide organization serving millions of clients in more than 40 countries. Known for its pioneering spirit, the bank introduced the UK's first credit card in 1966 and the world's first ATM in 1967, solidifying its reputation as an innovator in the financial industry. Today, Barclays provide a wide range of services including personal and business banking, credit cards, corporate finance, and investment solutions. With a strong focus on sustainability and digital innovation, Barclays is dedicated to delivering exceptional customer service to driving progress in the global financial landscape. Its blend heritage, innovation, and forward thinking ensures that the bank remains a leader in shaping the future of banking.
I'm going to present about the overview of banks of products and services that we provide by Barclays. What is Barclays? Barclays is a globally recognized financial company that offers a broad range of financial services and products to a varied client, which include individuals, small business, corporation, and institutional clients. Barclays also offers the following goods and services such as retail banking, business banking, corporate and investment banking, and digital platform. This is the top 4 of the product and services that Barclays provide to a customer. Next, we're going to take a look on the performance evaluation. The first one is profitability ratio. What is a profitability ratio? Profitability is a measure of how well a business makes money compared to its costs and expenses. It shows how efficiently the company is using its resources to earn a profit. A profitable business can continue operating, pay back to investor, and meet its financial needs. That is, the first one is ROE and NPM. The first one is ROE, is return on equity. As you can see, the year of 2022, the total of ROE is very high compared with 2023. It shows that the company is doing really bad on the year of 2023. A dip in the ROE indicates a decrease in the returns that the shareholder received from the capital investment. According to this, Barclays may have had trouble providing value to stockholder in 2023 as a result of a higher operational cost and decreased profitability. That's it, ROE. And for the next one is NPM. As you can see, for the year 2022, the NPM also higher compared to year 2023. It showed that the NPM drop indicate a lower profitability in 2023. Higher costs, higher implement charges, or smaller income gains could all be contribute factor. This implies that despite market turbulence and economic headwinds, Barclays had a difficult sustain the net profit.
I will explain about liquidity ratio. Liquidity ratio is a financial statistic that measures bank capacity to fulfill its short-term loan commitment. Liquidity ratio divided by 2, which is loan to total asset ratio and liquid asset to total asset ratio. Loans to total asset ratio are used to determine the total amount of outstanding loan as a percentage of all assets. The higher the ratio, the more likely the bank will default. The loan to total asset ratio for Barclays Bank in the year 2023 is 27.04%, meanwhile for the year 2022 it is 26.35%. It shows that the ratio for the year 2023 are much greater than in the year 2022. This is because Barclays Bank faced less risk due to the debt being funded by the asset. The liquid asset to total asset are a financial indicator that measure the ability of a company to quickly convert its asset to cash with a little loss of value. The liquid asset to total asset ratio for the year 2023 is 20.17%, meanwhile for the year 2022 is 21.01%. It shows that the Barclays Bank ratio for the year 2023 are lower than the ratio in the year 2022. This is because Barclays Bank faces more risk due to the less of liquid asset. The lower the ratio indicates the liquidity is low, which means that the assets are hard to convert into cash.
I will present about asset quality. Asset quality is a financial institution's ability to effectively manage its asset and reduce the risk of default or loss is determined by the asset quality ratio. It is computed by dividing the institution's total asset, which is NPA. The loan or investment that are not making money are known as non-performing asset. For the first one is the non-performing loans. The most used statistic for assessing a lender's non-performing loans balance is the NPL ratio. The non-performing loan sum is divided by the lender's entire loan portfolio to determine the NPL ratio. As you can see, for 2022, Barclays PLC get 1.7% and 2023 they get 1.4%. A decrease in non-performing loan about total gross loans was reflected in the improvement in the NPL. This implies greater loan recoveries, enhanced borrower performance, or efficient credit risk management. Next is loan to deposit. By comparing a bank's total loans to its total deposits over the same period, the loan to deposit ratio is used to evaluate a bank's liquidity. A percentage is used to represent the LDR. The bank could not have adequate liquidity to meet up for some point requirements if the ratio is excessively high. On the other hand, the bank could not be making as much money as it could if the ratio was too low. Loan to deposit Barclays PLC for 2022 is 73.1%, for 2023 74%. A little increase in the LDR suggests that there are more loans than deposits. Total customer deposit fell from 546 billion in 2022 to 539 billion in 2023, despite gross loans being constant. A slightly tighter liquidity position could result from changes in market conditions or customer deposit behavior. Lastly is deposit to shareholder funds. It calculates the ratio of the bank's shareholder equity to client deposits. It shows the proportion of the bank's deposits that are backed by shareholder capital. Deposit to shareholder funds for Barclays PLC in 2022 they get 791.3%, and for 2023 they get 749.6%. The proportion of consumer deposits to shareholder equity decreased as indicated by this ratio, while shareholder funds grew from 69 billion in 2022 to 71.9 billion in 2023. Customer deposits slightly declined. This strengthened the bank's capital base by reflecting growth in retained earnings or other equity components.
I would like to explain about the capital adequacy ratio. Capital adequacy ratio is one of the methods to measure the bank's ability to fulfill its responsibilities. It also employed to safeguard the deposits and advance the effectiveness and stability of global financial institutions. Capital adequacy ratio, it contains of capital to risk-weighted assets (CRAR) and also the core capital ratio, capital to risk-weighted assets of Barclays PLC. The function of this ratio is to evaluate the capital strength of the bank in relation to its risk-weighted assets. It has been mandated by the Basel III in order to maintain the financial stabilities. Based on the calculation that have been made by our group, it shows that the capital to risk-weighted assets ratio for Barclays PLC have been decreasing from 2022 to 2023. Ratio has been slightly reducing from 20.8% to 20.08%. This decreasing does not indicate whether the bank in a good or bad position, as long as it above the regulatory requirement that have been regulated by the global financial institutions. The next one is core capital ratio. The uses of this ratio is to calculate the ratios of the bank's core equity capital to its risk-weighted assets RWA. In Basel III, it also indicates that it is a crucial indicator of a bank's soundness. It shows that the core capital ratio of Barclays PLC have been decreasing from 2022 to 2023, which is from 13.9% to 13.79%. The decreasing of this ratio does not indicate whether the bank is a bad or good position for the financial situation, as long as it is above the regulatory requirement. Despite being marginally lower than 2022, Barclays' core capital ratio in 2023 is still solid and indicates a secure financial position.
Next, I'll be presenting about management soundness. Management soundness refers to the overall effectiveness and competence of the individuals or teams responsible for making decisions, implementing strategies, and overseeing the operations of an organization. Management soundness plays a crucial role for an organization's success and sustainability. So, based on the chart given, administrative expenses as a percentage of overall expenditures rose from 14.62% in 2022 to 16.43% in 2023. Administrative costs increased more significantly from €2,446 to €2,782. This suggests increased operational costs or a change in the budget priorities towards administrative operations in 2023, as administrative costs increased both in absolute terms and as a percentage of total spending.